The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And today, May the 9th, we will go right ahead. Thank you to all the hosts, and keep listening because today, being Wednesday, you just got programming all the way through to 5 o'clock. Let's go to the Dow. The Dow's down 51 at 17,953. S&P's down 7 at 2112. The comp index is down 14 at 4,960. VIX index has moved up to 1452, up 44 cents. It's in the 15s that the selling pressure will be continuous. Otherwise, you can see a bounce. And I think that that's what we've got to be prepared for here. The E-minis are down 7 at 2111.25. Made a peak. No. Until the day is done, that's the entire day, going all the way through, we've got the high on the 6 is 2119.75. Today's high is 2118, 2118.50, and $1.25 lower. Let's see, if there's no new high today, then this will be a peak. I'm calling it a peak F/C. My preference right now is to call it a C and think that we have one more pop to come, and that might be Friday or maybe Monday, and then I think you've got to be really careful. And let's go on to the QQQ series, 1, 2, 3. The QQQ series down 13 cents at 110.24, held the 9-period moving average. It has to go all the way from 110.24. I say all the way because it's been tough to do these days, to 110.75, and only at that level would it make 110.76 makes leg D. But it's still under the 111.44 high of the 19th of April, and therefore this is a retracement failure mode. That's not to say that it is a negative. It is just an explanatory theme that I'm giving here within the context of the waveform. Let's go to the IWM, which has been one of the most powerful of the indices. It is going to make a peak D if it doesn't go above yesterday's high. It's at 117.75, down 68 cents. We're always looking for those Ds. Remember that D? Look at that D at 115.05 with 115 follow-up the next day. Chapman wave 2-bar reversal, pull back all the way down to 107.90s. And then the last peak D before that was at 109.95 on the 18th of March and pulled back down to the 105s before it had that 10-point rally. So these are something to keep in mind. The MACD is very strong. Stochastic is at 95%, nothing yet. But in the Dow, I think that we're starting to look at some topping action with not that much on the upside just yet. Then I think there could be a sharper pullback. But the major trend, based on the weekly charts, is still up. All right, let's go to the gold. Gold is up at this point, up 660 at 1268.70. Now, what is really interesting about this particular aspect that we're looking at in gold is that the move from the 1200-ish area to the 1268 has been almost a straight line, because the peak A was just 1 bar and then it went higher and sharply higher. Peak B was just 1 bar and then sharply high yesterday, following through to today. So I'm looking at this, and one of the reasons why for my subscribers we went long the gold miners is because very often you see an accelerated move in the gold miners if gold has a sharp rally. But on the declines, you've seen a pullback, but not anything quite as sharp as gold, as the gold miners on the whole have held quite well. So it seems to me that this is a very good move for gold. And if you put it in relationship to the dollar DXY, the dollar is having a nice move up today, 46 cents, 94.05. And what's interesting about this, and it's fascinating that you've got gold and you've got the dollar up at the same time. that only happens, it happens infrequently. And over a period of a year, you can look at the parallel charts where you can overlay gold with the dollar, and you'll see there's maybe 5-6 weeks at a time, maybe twice, maybe 3 times in the year that you can actually get a parallel motion rather than a divergence, because usually they mirror one another. Now, what's really interesting about the dollar, that this sharp move down has said that that monthly chart with the U, with this one U that's formed from peak B at 100.39 to peak C at 100.51, 12 cents higher, and then the sharp pullback to a lower low below the trough of the August low of 92.62. We went down to 91.92 in the last move in May. That's saying you've made a higher high and a lower low. You've got yourself a little bit of an engulfing candle if this was like a 6-month candle. So it's going to be really important at the end of June. Where does gold close and where does the dollar close? Because these are factors that are international factors. It's not just local. All right, let's go on. We've got the EUR, USD. That is rallying. No, it's pulling back after a sharp move to a leg B. We're going to be watching this because it looks very much like the dollar. Sorry, it looks very much like the inversion of the dollar chart. That's what I meant to say in the monthly. So here again, 1.135, down a fraction. We'll see what happens. 1.129 is the 9-period exponential moving average support. Now look at this. Bonds. The TLT, 20-year iShares 20-year Treasury bond ETF, is trading at 134.10. That's the low of the day, but it had gapped up, and it gapped all the way to 134. 134 was that 54. I'm calling this leg C. Yeah, you can have an alternate wave count, but everything about it says stochastic at 88%, MACD good. What else was I looking at? Very, very far off the 9-period exponential moving average. Second big gap up. It will get filled at some point, but right now it looks very good. And I am looking at the chance that it could go a little bit higher. But one thing, I remember I mentioned this yesterday. I said it seems impossible. I mentioned actually a few days ago that the TLT could go to 135.26 to start leg D in the weekly chart, leg C in the monthly chart, gray, because both of them it'll be a D, but it'll be a gray leg C underneath the 138.50 all-time high in the TLT. So let's just put this together with bonds, and look at that. Bonds, in fact, whoa, that is really exciting. Bonds in the week of February the 12th of this year went to 168 and 3/30 seconds. Today's high is 165 and 20/30 seconds. Oh, like the TLT, just an eye blink away. And as Peaky in the Den says, yeah, chase for yields. And wait, have a look at this. I had a very nice email the other day from, actually, let me find it, because we wanted to look at this. I think it was from Bob. And he said, look at this. And it wasn't J&K that he mentioned. I looked at J&K. It's one of my favorites. The junk bonds. What a nice rally. I spoke about this a while back. Hey, I'll be right back. Basil Chapman, Tiger Technicians out back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So these interest rates that are so low, this is the HYG. This is the iShares, iBox, dollar yield, high yield, what is it? Something or other. What does that say? Corporate bonds, I guess. And it's in, I've got it in leg C, maybe a peak C. I could give it an alternate count, but everything looks like it should have at least one more pop to the upside. And that's really important. Same with junk, which is the junk bonds. So let's talk about yields. Let's talk about the TLT bonds a little further. Let's go straight to Mark in Denver. Mark, yes. What are we looking at here?
Hey, I was looking at that TLT, and you kind of already talked about it. I wanted to wait to short it until it hit that 135 number that it would make a peak D, I believe, in the weekly.
So a leg D, if 135.26 starts leg D.
Yeah.
And we might be very close to that. If I look at the TBT and I'm trying to do an assessment and say, hey, if I was doing the mirror image, because the TBT is the mirror image of the TLT, I'd be looking at it and I'd say, okay, where do I, rather than say, where do I get a sell signal in the TLT? I'd say, where is the possibility that I'd get a buy signal in the TBT, which is the ultra-short Lehman 20-year T-bond fund. Funny, it's still called the Lehman 20-year T-bond inverse fund, right? And what we're looking at is
30 on below. Yeah.
And this one has already made a lower low in the weekly chart, which we're missing in the weekly chart of the TLT. So this has gone to an F, and this is recycled, but I'll call it an F for now. The monthly chart shows no signs yet of some stability. It needs the weekly to improve, and the weekly needs the daily. But if I'm looking at this, and I'm going to make it bigger because it's always good to look at the chart. Actually, let me do this. Let me talk this about patterns, because, you know, in the Chapman wave, we look at the lowercase h that can become a lowercase m formation. You saw that perfectly when the high of 52.25 back in June of last year started to decline. There was a lowercase h pattern, and it broke down, and then it kept on going lower until it went from 52 down to 40.31. For yields, that is amazing. Then it rallies very sharply, goes from 40.31, it rallies all the way to peak D at 47.38. That's not a plus sign. That should be a down arrow because it was a completion of a Chapman wave buy mode. And then it pulls back, holds the low, makes another arch formation, and it finally breaks down. When it breaks down this time, my rule of thumb is that you have where is it? The low that was made on the 24th of August at 40.31, when that very large arch or two lowercase h's pattern becomes to test the left side low, it has within, this is a daily chart, within 2 days to close above the low of 4211 made on the 24th of August. What happens? It gets all the way to 40.28, so that it hasn't yet taken out the low, because it took out the low of 40.31. It goes to 28, and then it breaks down. It goes to 39.01, and then it goes and closes at 40.36. That's interesting. It did close above it, but that wasn't good enough, because what that says is if you close above the left side low of importance, it can bounce, but it could bounce to the next peak or moving average of resistance. Well, it did exactly that, and then went even lower to 34.62. Excuse me. Now what we're looking at is yet another H that has gone to an M pattern, and all I can say is the low of 34.62 of the 11th of February is being taken out today, because we're at 33.97. You've got 2 days in which to close above 34.62. If it cannot close above 34.62, it went to a lower low. This is the second day that it's done that. So it says that you will still go lower until there is an activated buy signal. That'll probably come from the 120-minute or the daily chart, but it's not looking good right now. So it's at 34.25. It's got 37 cents. No, what am I saying? 25, 37 cents, 39 cents, somewhere around there to bounce by the end of the day. And that says, it could finally have a bounce. So my thinking here is based on the TLT. There are three things that we're looking at. Number one is we're looking at the pattern of the TBT, the low of the TBT. We're looking at the high of 135.25 of the TLT. That's the Lehman iShares 20-year Treasury bond bull side. Now, that's number one. That's number one is the TLT. Number two is the TBT. Number three is if we have started a short-term sell signal, and the traditional way of looking at the market, saying that money exits equities and goes into the safety of bonds, if the market starts to decline, that's the third challenge, and that's going to be a challenge going, what's today, Thursday? I would say it's a challenge going into Tuesday. So now I'm going to say to you, my theme of the Japanization of our bond yields is still in place. There's competition for lower yields, but as a counter trend bounce, if you're looking at the TBT, my thinking is that the low today is 33.97. I would not be surprised if one bought the TBT at below 34, and that it is a bounce, but it might just be a short-term bounce. If by Tuesday of next week, the stock market sees the Dow go under 17,800, the S&P under 2095, and the volatility index pushing 15.60 to 16.10, then I would stay with the TLT. I would not even think of the TBT. So as it stands right now, if the Dow is going to break upside, it needs to break very quickly to the 18,090s, to the 18,120s, with the volatility index sliding underneath the 14 level. And that would say that the TLT could start to pull back and the TBT could rally. So those are the parameters I'm looking at. At this point, I think we're getting close, very close. In my work, we've already started a position on the short side in the index, one of the indexes. And I think that the upside is actually limited. And I'm just going to show you something really quickly. If you're looking at the Dow, let me just go INDU. This is a chart that has the Chapman wave resistance and support levels. And you'll see all those green at the top, 18,079 in the daily, 18,009, 79 in the 10-minute. 18,041 and 18,060. Very strong resistance levels in the 120-minute and the 17,984, 18,300, and 18,367. Strong resistances on the upside. Doesn't mean to say you can't go there. I'm just saying I'm starting to see resistance levels, and I think that from the work I'm doing, looking at my Dow Quartet, GE, IBM, MMM, and UTX, I think we're real close to another little digestive phase. So that would be where the TBT won't be rallying, because the TLT will rally. So what you need to see is a strong breakout into the 18,100s. And at that point, I think you've got yourself a trade in the TBT. I hope it didn't sound complicated, but those are the levels that I'm looking at.
No, thank you. Appreciate it.
Thank you for calling. Good call. That was Mark in Denver. Dow's down 64, S&P's down 8. And I'll be right back because we still need to look at crude oil. And I had a bunch of questions about crude oil. I'll be right back. Basil Chapman, Tiger Technicians.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So I had a really nice email overnight. Hi, Basil. Been watching TFNN recently, about a year. Enjoy the show as always. Sometimes the theme you talk about opens the eyes. Been working in Tokyo for a bit and noticed huge developments. Billions of dollars in new residential and commercial buildings everywhere, cranes all around. Some links about this Negative bond yields pushing cash into REITs, pushing new development. 20-year fixed mortgage in Tokyo is 2%. Floating rates at 0.90. That's unbelievable. Average condo cost in Tokyo at peak levels since the pre-Lehman days. As always, thanks for the great information you bring up. So how does it all end? Where is my crystal ball? Regards, Bill. So, Bill, that's thank you for sending. I'm getting these emails from people around the world, New Zealand, all over the show. What's really important about this is that it's a period that is unlike any other period. In the Boston Globe today, they have the front page. They have John Kerry selling. It says John Kerry selling. It's actually his wife's house. This incredible house on Nantucket, one of the exclusive areas of Nantucket and one of the exclusive islands around here, and in Massachusetts. And it's for sale for $7 million, right? Then I read it. I thought, okay, I usually just ignore that, but I decided I'd read it. And what is it? It's a house that was built when? 1880s, 1890s, 1910. 1950s. No, the 1920s. I mean, the way the cycle is working is just absolutely uncanny that we are matching that period and other periods of intense gluttonous buying. And now, if people can afford it, great. I mean, I have no problem with people buying whatever they have. I'm only talking about it in terms of a fad, or not a fad, a theme that is increased in visibility. And I mean visibility because we're talking about skyscrapers and very expensive, the bigger, better. So that's the reason why I'm talking about it, because it matches other themes that I've discussed for a long time, and we'll see how it works out. So Sarah asked about BAC, and we were out of our XLF trade, took a little profit. No, we broke even, and we're out now. And we're done. And that's a peak E. That peak E that I made with a plus sign now gets a down arrow because it is underneath the 9-period moving average. The MACD's turned down, stochastics under 80%. I feel comfortable putting in a down arrow. Even if there's another spike, that'll have to get one of those inverted little V-shaped patterns. But in this case, I think that this is a top, at least in the daily chart. But the weekly chart is still looking pretty good. So 2336 right now. If you look at BAC, Bank of America made a peak C. This is that Chapman wave lowercase h formation. You remember, chart formations occur only 3 ways. It's either straight up or straight down. Look, straight up or straight down. Or it makes an arch or an inverted V or a cup or a V-shaped pattern. So 3 patterns: straight up, straight down, cup. Cup could also be an inverted V, or the cup could be a V or an inverted V, which is also the arch formation. That's it. Make it simple. And trends: higher highs, higher lows, and lower highs. That's how the trends work. So what we're looking at here, let me show you something. So yeah, be very careful. The bank stocks are now vulnerable, and with rates going down and not up, it's a problem. And the next question I had was, where did it go? Oh, crude oil. You see, this is very difficult for me, and I'll tell you why. Everything I'm looking at in the commodity sector now is getting to the point where it is. Well, let me do them one at a time. Crude oil has had a very steady move, higher highs, higher lows, a stair-step move, walking the 9-period exponential moving average, leg D in the weekly. But my eye says that I'm looking at enough indicators that says this could be a peak G, or it could go to, this is a leg C right now. A lower high tomorrow starts a peak. Is it a peak of consequences? I'm going to say it again. I think the crude oil is trading between, now it's sort of at the upper end of the range. What did I say, in the 51s? I think I might have said maybe it could go to 52.20. It's not there yet. The high today is 51.40, 51.62. And it could go a little higher, but my thinking is that there's a whole consolidation that's going to occur, and I'm going to actually now draw it in. We had the instant restart potential right there. I don't want to mix things up. No, I'm not doing anything. It'll make it confusing. I don't want to do anything now. I'll do it tomorrow. So in the meantime, crude oil, I think, is getting extended. It's getting a little bit to the upper end of the range. Now it could start to go chop, chop, chop with slightly lower highs and slightly lower lows. But I see tremendous support in the 48 to 46 area for crude oil. If I'm looking at gold, nice move up. I'm still putting it into the context of a great confirmation that gold has made a fairly significant intermediate term low from the low that was made back there in December at 10.50 on the continuous contract. And it's now all the way up at 12.72. I think I see it going higher, but I also see that it's in a range, and that range can go to the Chapman wave. This is a potential stork leg formation, and it will probably go towards the 1290s and then start to move down to test the 200 period moving average in the 12, let's call it the 1260s, and maybe slip to 1250. Dollar has a little bit of a rebound. And then the big thing will be, will gold in this move of the summer, I would even have to say July, I'd have to put a date. If in July it breaks 1310 to 1312 resistance, that's going to be very important. But on the downside, if it goes into this chop chop sideways move, I really do see a lot of support in the 1250s to the 1230s. It could just chop around, but so far it's very good action. Okay, now I wanted to do something else. I'm testing fate. I don't usually like to do this, but I decided today I've got something that I gave my subscribers. I called it what did I call it? I called it a study piece. And then I decided, you know what, study piece, schmuddy piece. I'm going for it. And this is one of the best stocks. You know, in the Chapman wave, we like to try to identify tops, and we like to pick tops on major muves in stocks. So we've got something that is called Albemarle Corporation. I spent a little time on it the other day. John the Den wanted to know about it. It's been along for a long time. And all I say to him is that this is the area where you might want to consider taking a little bit off, but keeping the core, because it's just been absolutely fantastic. It's the lithium batteries for Tesla and Panasonic, etc. So it's had a tremendous move. It just broke above the Chapman wave inside track resistance area, but I have to call this leg B. Why? Because the low that was made, oh, wait a minute. Yeah, the low that was made at 38.02, it went down to 41.37 in September of last year. Oh, I suppose I could call it in B/E. Maybe I will. I might change that. But in the meantime, the reason why I want to have a position in this particular stock, there are a number of reasons. And I'm actually showing it here. I guess it's not fair to subscribers in a way, because we just got a position this morning. But it is a study piece, and I wanted to explain what I like to look at and why I like to look at it. And also, I promised John that when I get a position change on it, I will let him know. I'm letting him know right now. I'll be back. Dow's up 65.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. Dow's down 17, S&P's down 9. A much deeper correction in the S&P today. Let's go to Brenton Martinez. Brent, how are you?
I'm doing great, Basil. Nice to talk to you again.
Good to speak with you. You'd like to look at?
Well, just so happens you were talking about a stock I had planned on calling you about. I saw it in the newsletter, and my question for you specifically is that I always go do my own work, whatever recommendations somebody might make. I try to do my own homework. But my question to you was, when I looked on the daily chart, it's been right in the 9 EMA for quite some time, and it hasn't, from what I can see, hasn't broken that yet.
Correct.
My question was if that's something you typically would do before it's done that, broken the 9 EMA, or it's just that's my question to you. Why you chose to do it at this time?
So you at this point you're looking at it. You haven't done anything yet.
I have not.
Okay, so let me explain what I'm looking at here. There are a number of aspects that are key to me to have this sustain. It isn't just an amazing move. This is just an example that is extremely rare. It's one of the reasons why I wanted to use it, because a stock that walks the 9 EMA can use it instead of as a staircase, but as a roof on the next move. And I have this visual image. For years, I've been trying to find the exact expression because, walking the 9 EMA just tells the whole story. But on the downside, I always think of those gondolas. They're busy hanging on the wire. And that's really what you want to think. The gondola effect, we can call it. I did once call it that, and then I found that it wasn't that successful. I'm going to try it again. So the gondola effect will be when the 9-period moving average, this thick black line, becomes a barrier, and it just constantly cannot break above it. We just saw that. I'm trying to think of the chart we looked at a moment ago, where the 9 EMA is just a repellent. It just the price refuses to go above it. So it's on the gondola on the way down. So here we go. What I'm looking at is, since this is Albemarle Corporation, as I say, lithium batteries, Tesla, Panasonic, etc., broke above the 9 EMA back on, this is amazing, on the 12th of February. It was under it, and then it went above it and started at peak D and pulls back, and then it starts a beautiful move. It was just one day, on the 23rd, it closed under the 9 EMA for just a fraction, because the next day it went way below, but then closed above it. And from that moment on, it might have hit the 9 EMA, but there's not a single bar that stands out. Look, there's one that might have just for a second on the 29th of April gone below. Otherwise, it has literally walked that 9 EMA, and that has been an incredible platform for it. And what is the 9 EMA? It's an exponential moving average. But wait a minute. This last move up actually did see the MACD break to higher ground. The stochastic was down at the under 80%. It went over 80%. It's still at 84%. But look at the way the MACD has crossed negative from the action on peak C that was 4 days ago at 82.16, pulls back, makes a peak C. That was leg C. Then it makes a peak C on the 7th of June. On the 8th of June, it goes to a higher high of 82.37. Look at that vertical line. You can see that the MACD is just about to go negative. You see the stochastic's already on its way down. The on-balance volume, though, did climb to a peak, A, B, C, D, E. It went to an F, I believe. It's a little bit covered, but I think it went to an F of this peak D right here. But you see the two little doji candles. Now let me expand this a little bit. See these two little doji candles right there yesterday and the day before? Well, the pattern of the stock is it's been climbing, but it's been climbing without really wide price spread. In a sense, it always has about a 2-point or more price range, which actually for some stocks, that's quite big. For this stock, when you look at the different patterns, what it was doing before, it was having much wider. So it seems to me this is a kind of a distribution that I'm looking at, number one. Number two is when you're looking at, there's a little thin red line. I don't know if I'm going to try to highlight it right there. See that red line? When it's underneath the black line, price moves up. When it goes above, it sort of stalls the rally. Then it went a little bit under it, and now it's back above it again. And it's suggesting to me that the faster moving average is telling us that there's a chance that if there's price weakness going into Friday, today and Friday, finally we could go underneath the 9-period moving average. That would push the MACD down further, and finally the stochastic could go under 80%. So all of this is a preamble to the 120-minute chart right here, 120-minute chart, which made a peak E yesterday with very, very negative technicals and has plummeted today from the high of 82. I say plummeted because we're talking about a 120-minute chart at 82.37. Today's low is 80.35. So that's a 2-point decline in the 120-minute chart, and it doesn't often do that. In fact, the last time it did that was just going into the June low. So I've got all the little things in place that says on a daily basis, there could be some kind of a pullback. That's not good enough for me. What I want to say is a leg E or an F in the weekly, very extended. We've got that. It's above the left side former peak right there of 76.28 on the 18th of July of 2014. And now it's made the cup formation. And in the Chapman wave left side, right side price break, you get what's called the Chapman wave cup and ladle, which takes you to at least a D or an E. So here we are in E. So what I've said is in the little study piece that I made, I said that the weekly and the monthly are still pretty good. So we can't expect all that much on the short side, but as an experiment, because I do like to try to pick all-time highs in many of the indices and in many of the stocks. These are the characteristics I would look for. Now, the big thing is that I would need to see Tesla probably. It's going to be a heads up. If this comes down, it's saying that the batteries aren't going to Tesla. And my final thing was that Tesla was in leg D yesterday, a peak D if it makes a lower high today. And so far, that's the case. The technicals are not nearly as strong as they were. And the technicals in the weekly chart are not very good, and neither are they good in the monthly. So I try to put the whole thing together as a little study piece. So my thinking here is that I would go one step at a time. If we were fortunate enough to get a really good price today, which we did, we short at 81.01. It's at 80.26. We've now got a little bit of a cushion. And that's really how you want to start these things. So if I'm looking at ALB trading at 80.27, down 94 cents today for no reason, it's down 94 cents. That's a big down move. It hasn't had one of these moves for a while. I think there's a good chance that this has a possibility of going to the 77.47 low of the June the 1st, just about 8 sessions ago. And if it takes that out, my real target would be between 76 and 75. And that's when I'm going to have to reassess the weekly chart. So it's just a shorter term trade, which has the possibility to turn into something bigger. And all I'm saying now, and make it real clear, it goes to 83.50 and I have to restart the thinking process. So I've got the stops in place, everything's set. It's going to have to tell me now, and now it's going down a little bit more as we speak. I hope that helps you a little bit, Brent.
Oh, absolutely. Very thorough as usual, Basil. Just have a wonderful day, and you take care, all right?
Thank you very much. That was Brent, and we're going to go straight. John, if you can hold on. John in Merlin, D.C. We'll be right back looking at UNG.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. We're going to go to John in Merlin, D.C. Merlin, where is Merlin, D.C., John?
Maryland, yeah.
Okay, I'm not familiar with Merlin. All right.
Okay. Yes, thank you for taking my call, Basil.
My pleasure.
I want you to look at the UNG. It looked like it broke out today. I was wondering, is it good to buy now or wait for a pullback? What's a good entry point?
Okay, so let's just make this clear. Folks, UNG, which is the United States Natural Gas Fund, is trading up 5.78%. It's trading up 43 cents at $7.87. It's had a spectacular move. I have to call this leg B, which says that it should go even higher. So let me do two things. I'll tell you what I'm going to do. I'm going to do one thing right now, if you don't mind. I'm going to skip to a stock that I was asked about, and I promised a subscriber that I would talk about it. Just 1 second. It's Yelp, trading it up 5 cents at $27.76. It's in leg D, and it made the rectangle formation after peak F, And that rectangle formation usually says you're going to go to an inside buy mode that takes you to just under or just above the previous high, and then it could pull back. So I'm just going to say, Manjeet, why don't you take a little bit off now of Yelp? Nothing, just to kind of reward yourself. Be prepared that it could pull back, but it's looking really good. It's leg C in the weekly chart. And I just wanted to do that because he asked me about it and we had spoken about it before, and this is it. So now I can go to UNG and we can take time on this. One of the things I would do if I was you, would you just go straight out and you'd buy the UNG or anything else related? It would just be straight the UNG, right?
Right.
In other words, you're not trading, you're not going to go to the futures or anything like that. You're going to UNG. So
Right.
that's question number one. Question number two is, are you looking for more an intermediate term? Would you take quick profits, or how do you want to do this?
Well, more intermediate term, not long term, no.
Okay. If you're going to go intermediate term, of course, at 788, it's not 740. It is 40 cents higher, but 40 cents higher is still about 7%. It's not, it's 5-6%. So I'm going to say to you this. Why don't you start a small position on UNG? But I'm going to recommend that you do that. You go to UNG at 788 right now, but it's nothing like the position you wanted. All you're doing is you're just tiptoeing in. You're going to nibble on it to at least establish that if it goes higher, you're in the stock. It gives you a feeling of at least participating, not participating enough. But if it suddenly pulls back over the next 2 days, that means that at least you've got a smaller position. Now you can look at what I really would like you to do is over the next 3 days, Friday, Monday, and Tuesday. Even Tuesday morning's fine. You can call me, or Wednesday. Let's look at it again, because if you're in a small position, and all of a sudden tomorrow we're looking at it, and now instead of $7.90, it's at $8.10. Well, you've got your small position. Gosh, what do you do now? So all I'm going to say is the best thing is to establish a small position, because it's a leg D in the weekly, but it looks very strong. And the stochastic and MACD in the daily are very good. But the best would be is if you have patience, start a little position now and then put another one in between $7.60 and $7.52, somewhere around there, another small position. And that's what I would do. I'd step in now. Gently, I wouldn't get carried away, and then I would put another position in on a pullback. Why? Because the weekly looks strong enough that if there is a pullback, you'd have a little bit of a risk if you got in at 7.55, because it could go to 7.33. But it looks to me like the trend is being established in the weekly chart as being an uptrend, but it could digest the gains very soon. This is a good sign. I hope that helps you.
Okay. Yeah, okay, thank you, Basil.
Thank you. And if you can give me a call next week, let's follow it up, okay?
Okay, all right,
Thanks.
thank you.
Thanks, folks. Thanks for being here, Downtown 78. And what I wanted to just do, watch the VIX index. If the VIX doesn't go above 15, we could still have a little bit of a move and a pop-up maybe Friday or Monday. But so far, we're looking at the start of a downturn. I'll be back. Bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,